Hello, everybody, and welcome to the seminar today. Today is September 11th, and I will be presenting some strategies today, some simple and effective strategies to utilize in any market. And we're going to go ahead and go over some strategies also regarding options, price action, psychology, and a little other subjects that are relevant to the stock market when it comes to trading. Okay, so but first of all, check out our disclaimer before we start. You can read this at your own time, just letting you know that we are not financial advisors. We're not professionals, so just go ahead and read this on your own time, but we just have to make you aware of that. Okay, so before we start though, I would like to thank you for attending today, and thank you to Rachel for extending an invitation to speak to a female stock trading group, Stock Ionis. Correct me if I'm wrong, if I'm pronouncing it wrong. But thank you, ladies, for having me today and speaking to all of you for taking this time and coming into the seminar and checking us out and see what we do. Okay, and as you guys know, female traders are not common in finance, and it's really awesome to see a group of female traders. I really have not seen that at all. And here's a little background of myself. I've traded for the past 7 years. My name is Angie. I go by Trader AC in our group at Taco Traders. Like I said, I've traded for the past 7 years. And at that time, we didn't have too many female traders, if not any. I think there was one lady that I ran into at one point, but that was it. It was just mostly men, and the groups that I joined at that time, because I started trading pennies in the OTC market. It was like about 90% men or 99%. I was like the only female in that group, and they had no idea that I was a female. And they were surprised because I knew how to trade. And so they were a little shocked that I was a woman. But I've been trading for a really long time, and it's really awesome to see you guys trading. And hopefully what I share today will come useful. And if it's not, at least you can learn something from the presentation that I'm going to give you today. Okay, so let's get started. Here is our outline for the day. We're going to go over just some of the basics. Okay, I'm not too sure what everybody's background is, but you know what, let's go ahead and just talk about the basics. What is the stock market? How does the market move? What is charting? And how do you read a chart? How do you draw your support and resistance lines? What is price action? And how can you interpret that? We're going to go over what are options contracts. We're going to go over on how to manage a trade, because that's also really essential. Trading mistakes and how to avoid them, and who is this for, and lastly, what do we offer at Taco Traders? Okay, so let's move forward here. The basics. So to be a successful trader, you first need to know the basics to comprehend the charts and the market behavior. So it's not just about looking at the chart, it's about kind of getting to know what's going on, in your surroundings, what's going on in the market, what's not only in the chart, but what's going on around the world. Okay. The stock market is a collection of buyers and sellers trading different types of instruments, from shares, dividends, fractional shares, we have options contracts, we have futures contracts, currency, binary options. Oh, and then we have the crypto market, which is, a whole different, type of world. But What I'm trying to get at is that, you know, there's a chart involved in all of these instruments. Okay. And it's really important to know how to read your chart if you're going to trade, even if you're a passive investor or an active trader. Okay. And the basics are also selecting your stocks. And if you're a beginner to the stock market, or, you know, you don't know where to start, you can just start by trading what you know. You know, if you just want to simplify your trading, and a lot of people do that. A lot of people stick to, you know, one stock, you know, like I know this trader who just trades Amazon all day, but he has a big account, so he can support that. But what I'm trying to say is that he doesn't have a lot of variety, but he, you know, he's a good trader. He knows how to read a chart. You know, all he has to do is just sit in front of the computer, look at his Amazon chart, and just execute his trades and, you know, make his money for the day. But, you know, you can start by trading, you know, where you shop. Like, for example, Starbucks. You have companies like Walmart, Target, Costco, Nike, you know, Ulta, Macy's, Foot Locker, The Gap, you know, your cell phone carriers, AT&T, Verizon, you know, gas stations like Chevron. And, you know, we like to shop. And so we have an advantage to the stock market because it's like shopping. You know, I look at the stock market sometimes like shopping because if you know how to shop and you know how to buy at the right time, you can get, you know, a really decent return, you know, in a stock that you invest or that you buy. So it's kind of like the same thing, you know, same concept. You just have to know how to shop, when to buy your, you know, your shares or your contracts, whatever instrument you're trading, you know, to get a better return. And, you know, like I said, if you just want to simplify it and trading what you know, you know, you can just stick to one or two stocks and, you know, go ahead and trade it if you want to buy some dividends even, or, you know, some contracts, shares, fractional shares, what have you. But just know what you're trading. Okay. Don't just go into the market, look at the scanner and say, hey, I'm going to trade the number one stock that's trending. And then just goes, you know, the opposite way. You don't know anything about it. But here, you know, we all know what's up with Starbucks. You know, we know they're like the best and, you know, a very huge company, a huge enterprise, you know, that has stores around the world. So, you know, of course, their numbers are going to be pretty good. You know, their shares aren't that expensive. They're pretty decent. Same with Walmart and the rest of the stocks. Okay, so just something to keep in mind. Also, technical analysis. And really what technical analysis is that it's used to analyze a chart by different types of methods. You can use indicators or you can use price action, depending on what your edge is. Okay, so those are, you know, some basics just to keep in mind. And this is just an outline on how the market moves. Okay, the stock market moves in 4 phases. We have the accumulation, which is right here. We have advancing, which is an uptrend, and then we have distribution. You know, sometimes when, you know, we're in a really big uptrend, we'll just rest for a little bit. And then, you know, if the price is exhausted, or, you know what, we can't, you know, break new highs, then we start to decline, and then we have a price correction, or we just have a sell-off, depending on what's going on, you know, in the market, or, you know, with the ticker that you're looking at. But, you know, really in a declining market, you know, this is where a lot of traders and investors start to look at the market for buying opportunities. Okay, so these are the days where you get, you know, stocks on sale. I mean, look what happened when the market crashed last year, you know, when they shut down the country because of COVID. The market tanked, you know, and it was just making new lows. And, you know, it got to a point where it got halted a few times. I'm not sure if any of you were trading actively at that time, because I was shorting the market and it was awesome. And, you know, it got halted a few times and we made, you know, historic lows, you know, in just a few days because people were panicking. But at that time, not only were people panicking, you know, newbies, people that don't know, you know, what's going on in the market or how to trade, you know, they're panicking and they're just selling, you know, because they think that, you know, stocks only go up, and that's really not the case. Okay. We don't just go up all the time. You know, we have our phases, and you have to know how to read it. You have to know how to understand it. Otherwise, you know, you're going to have a really hard time, and you're going to be these people that sell in between, and, you know, get stopped out, and you end up blowing up your account. Okay. But these are the times, you know, where you know, investors were buying. People were just buying on the way down also. And they were just averaging their positions. Once we reached the bottom, you know, all of these companies just bounced back. I believe Starbucks was like what, at like trading like at $30, and now it's like at, you know, 120. Disney also was like dirt cheap, and, you know, look at it now. And you guys can see the charts, you know, if you guys use, you know, platforms like Thinkorswim or Charles Schwab, you know, something where you can see the historical data, you'll see how resilient we were and how we had a lot of investors. We had a lot of big money buying at the bottom. Okay, so it's really important to know when to do that. Okay, you're not going to do it, you know, midway right here, right? Because I said that you buy on the way down. No, that's not how it works. Okay. You know, and really we show you how to do that. We show you how to recognize that, how to recognize, you know, when we're in a declining market, you know, when we're just, you know, ranging, you know, in price, or, you know, we're just in a consolidation period is really what it is. It's a consolidation period where, you know, again, you know, the investors start to load up, because look at this little pattern that goes on here. It's never going lower than that, because these people are buying the dips. And that's how, you know, these people, you know, end up having some really good returns, because, you know, they just end up buying the dips, and people stop losses here, and they're patient enough to go ahead and wait for the advancing market and then sell at the high. And that's how they do it. Okay. There's no formula to it. There's just, you know, a few little things that you have to kind of pay attention to, and it's all in the details. Okay. So now let's go into charts 101. Okay. A chart displays candlesticks and volume. Here you're going to see an example of, you know, candlesticks. We have a bullish candlestick, which is green, which is, you know, represents the buyers. And then we have this one here that represents the sellers. Okay. And as people buy shares, you know, or contracts, you know, the candle starts to form. And depending on what our demand is, so for example, here we have a high demand of buyers. So we opened here at the low, let's say, you know, $5, and then we close here at $5.50, but we made a high of $6, but couldn't close above it. But we still had a really decent close. People took a little bit of profit, but they're still holding on because they think that we can go ahead and continue on an uptrend if we hold above this price. Okay. Same thing over here with the bearish candle. Okay. We opened here. Let's say you're looking at the same stock. You know, we're here at 550. But then, you know, the sellers start to come in, the bears start to short it because we couldn't hold above the $6 level. And so they're coming in aggressively, and they take the price all the way down, and we close here. We close flat, but, you know, we still close red because we closed down here back to $5 a share. Okay. And the candles provide information about the price over a specific period of time. And it's going to tell you where the stock is going. Okay. And something to remember is that if volume is absent and we have an engulfing candle, it usually means that we either have algos trading or have a fake out. Okay. And I'm going to go into an example later on in the seminar, and I'm going to show you guys what is a fake out and what's low volume and what to do, you know, when you come across this issue here. Okay. And then here's a chart. You can totally see, you know, it's, you know, it moves up and down. You have your candles, you have your, your wicks here at the top, and you can see, there's patterns forming. Okay, so again, as candles start to form, they also form a pattern. So recognizing the price action, combined with patterns is crucial to your trading, especially if you're just doing good old-fashioned price action trading. Okay, so here are some examples of some patterns, along with some support and resistance lines. They can help you, with your entries and your exits. Patterns are forms of trends. And if a trend is not present, then you don't have a trade. Okay, so I'll go into this example here. I traded SPY yesterday, later in the morning, and Microsoft for a short squeeze at the 15-minute time frame. Okay, I took it easy yesterday. I was actually supposed to be off, but I wasn't off. I ended up trading for a little bit, and then I just stepped away from the screens. But let me show you here with this pattern sheet that we have here. Let's see. Okay. So, like I said, here are some examples of patterns. We already went over the basics here with this here. And whenever you see these candles here, this is called neutral, or it could just mean chop, which I like to, refer to that when we see these candles. These are incomplete, okay? You always want to wait for full candles, for full candles to form, because the full candles, as you guys can see right here in the bullish section, you can see that the patterns form a little clearer, right? As opposed to here, you have these tails, whether it's, at the top or the bottom. It just means that, there's indecision. And, neither the buyers or the sellers can make a decision. And so we just end up, again, range trading or in an accumulation phase. And, they'll just be, up and down, red and green. And then we have the dojis, which are just neutral, which, there's neither buyers or sellers. And then we have the gravestone doji, which means, it's a bearish indication that we might, go lower if we open below the previous candle. Okay, and then we have, these patterns also, which you can tell that it's accumulation, right? Because it's not breaking either above or below, but nevertheless, don't take your eyes off of it. Okay, always set some alerts and keep it in mind, because these patterns are very bullish or can be very bearish, depending on what's going on in the chart. If there's a lot of selling pressure, there's other factors that go into it, but always keep these patterns in mind because they are very powerful. And if we break to the upside, we'll have a nice uptrend. And if we break to the downside, we'll have a really nice, sell-off. Okay. And so let's say you're looking at this pattern here and you want to buy some calls to the upside. Okay, you're on the 5-minute time frame. The way you would set an entry, again, let's say we're looking at this stock and it's like about, $4. So what you want to do is you want to look for a pattern. You want to look for some solid candles. So let's say we're looking at this right here. Okay, and don't be too concerned with the names, because there's an infinite list of names for these patterns that I think that it's really impossible to memorize all these names. So the easiest way to remember is just, look at the pattern and look at the formations of the candles. And, it's really going to tell you what it's doing. Okay. It's going to tell you where it's going also. So let's say we're looking at this here, we're looking at a stock for like $4. Ideally, what you want to do, you want to wait until this candle closes, and you want to wait until the next candle closes, or I'm sorry, opens 5 minutes later. So let's say it's 7 a.m. For me, because I'm in, the West Coast. And so for me, the market opens at 6:30 in the morning. So for me, let's say it's 7 and it's 7:05. and I see that this candle is forming and that, we're opening above the previous close and it's engulfing, meaning that it's, taking over this candle, not only this candle, but also the rest of the candles, because, we have a lot of buyers present and we have a lot of pressure. And so your entry would be right here around $4 or $4.05. Let it hold a little bit over, and then you would take your profit at the close of the next candle. So let's say we keep going. We open here, and then, we spike up a little bit, but we fail to hold. And then we have that, that candle with the big tail like that. This would be indication to go ahead and take your exit here. Okay. And that only took you 10 minutes of patience just to wait, for this candle to open. You made a good, maybe 50 cents per share or per contract. Pretty sweet, depending on, what your size was. But that's how you would set, your entry, your exit, and then your stop loss would be underneath here at the open of the first candle that you entered. Okay, so that's why it's very important to know how to read the price action. Okay, always wait for these full candles to form. Always wait for confirmation to enter. And it's all a numbers game, and it's all a timing game. Okay, wait 5 minutes. If you're on the 5-minute chart and you're day trading, wait. Just wait it out. Wait for that 5-minute candle to close. And I know that it feels like an eternity because it's happened to me. And I found that my problem was that I was really impatient and I could not wait, until that 5-minute candle would close. And then, that's when, panic starts to kick in. That's when FOMO starts to kick in. And then, you just end up getting really sloppy with your trades. And so always wait for the candle to close for you to enter, whether you're going to the upside or the downside. Just read the candles, okay? Same thing in a bearish setup. Okay, a bearish setup here. We have the bearish engulfing, which is a term that's really important. Okay, we have the bearish engulfing, and then here we have the bullish engulfing. So why are they engulfing? Why is it called engulfing? Because it's overpowering, the previous candle, and we couldn't, go over it. Although we have this candle here that looks like, it's going over. You're like, well, it looks a little big, so I'm gonna hold because I bought some calls up here, and I'm gonna hold it. And then guess what? We start to sell off, and then we start forming this pattern. You're like, oh my God, I'm like about 20 cents down on this trade. I'm gonna get out. And so when you see this setup with a bearish engulfing, just wait for the next candle to come along. And if we open right here under it and, we have more selling pressure, then that's an indication to go short. Okay. So, again, let's say you're trying to short it, or you're trying to find an entry. Just wait until the candles form, wait until the price action looks consistent, and stay away from these tails. Okay, these are good points to kind of keep in mind, because sometimes, yes, we'll have a tail, but then we'll just, we'll open right above it. But again, that's when you have to be a little more proficient in your price action reading, and knowing when to wait, and when to execute your trade. Okay. So let me pull up my chart, and I'll give you guys an example on what happened. Okay. Alrighty, so this was Microsoft. You know what? Let me start with SPY. Okay, the S&P 500. Okay, if you guys trade options, you know that, you know, SPY is a favorite for, you know, for some of us option traders, because the contracts are so liquid, they're very affordable. And when we have volume and, you know, we have all of our, our criterias are met, you know, to take a trade, we can have a really decent profit. You know, but that's only if you guys, you know, trade SPY. Here is the the 15-minute chart. And the reason I pull up the 15-minute, and if you guys know my trading style, for those of you that are in the group, I wait 15 minutes into the trading day to determine whether I'm going to enter a trade or whether I'm just going to sit on my hands. Okay, because by that time, all of the panic sellers are gone for the morning, and all of the hunters are gone, at least for the first 15 minutes. And for the first 15 minutes, really is made for scalpers. Okay, if you guys are into scalping, it's a very fast-paced, you know, trading style, and it requires a lot of skill. And a lot of people get burned. Okay, and a lot of people probably got burned here because look what happened. This is why I like to wait. Okay, I like to wait. I like to take my time and just be patient. I wasn't trading in the morning because I took, you know, the morning off, but I did, you know, give the team some levels. I told them to take some puts under 449.20, which was around here somewhere. But that's because I was on a bigger time frame. But if you guys, you know, were watching it, you know, at the open, you would have seen that we had this fake out. Okay, and what is this line that I have right here? Let me zoom out. So what I like to do is I like to always look at big time frames. Okay, I always like to look at the bigger picture, because I feel that you can see patterns a little more, you know, clearly. You can see, you know, the chart a little more clear. Okay, and right now I don't have any indicators. I just have strictly price action going on. And I had this pattern drawn out, you know, a long time ago. And, you know, the price was just following the trend. It was just, you know, rejecting and trying to break new highs. And then finally it gave out. And then, you know, we're selling off, and look at all this selling pressure that we have here. Okay, so let me go to the 4-hour. So whenever you have a rejection of a trend line, whenever you have a rejection of your resistance, okay, for example, right here, and then we have, you know, this this bearish candle, we couldn't open above it, you know, after this 4-hour candle closed. What did we do? We just continue to sell. And, you know, ultimately, you know, we stopped here at the bottom at 445, but we had a nice sell-off because we couldn't open above this level here at 451. Okay, so not only was, you know, you could have been on the 15-minute time frame, you know, you could have also looked at the 4-hour to kind of guide you through the, you know, through the trade and know, hey, you know what, if this doesn't break 451, then, you know, I'm just going to go ahead and look for a short position and look at the price action. Okay, so which is why I like to do, you know, the 15-minute, because whoever bought up here got faked out, and now they're panic selling, and now the shorts are taking over, causing a lot of selling pressure to the downside. Okay, and this candle can confirm that. Okay, what did I say about the tails? Okay, the tails, this is a strong rejection, and this is just telling you that the sellers are taking over. Had you waited a little bit, you know, at 645, you could have caught a really nice short to the downside, because we couldn't open above, you know, like I said, 451.50. Instead, we just continued to sell off. Okay, so if you guys were watching this at the 15-minute, all you had to do was just wait for the first 15 minutes. Then 645 came along, you know, we couldn't open above, and we have a lot of selling pressure. And this is, you know, this would be your entry here at 450.20 right here. And then, depending on your account size or, your approach to the trade, you could have added another, some other contracts here or added to your position right here because we couldn't open above it either. And, you have all this bearish, these bearish candlesticks forming, letting you know that there's a lot of selling pressure to the downside. And then finally, the shorts try to cover here and fake you out. And a lot of people covered here and they, just continued selling to the downside. Okay. And, this applies to any chart that you guys look at. Okay. If you guys are looking, into the OTC market, I don't think that their stocks are that liquid, but you still have a chart to look at, right? There's still candles forming. There's still, price moving. And so you can apply this also, in any market that has a chart present. Okay, you could go to the Forex market and go ahead and, utilize price action. And really, price action strategies, I've pretty much learned them from a lot of Forex traders because they're really good. And, as you know, the Forex market is open, 24 hours a day, just like the futures market, and they're trading, nonstop. These guys do not stop. I don't even think they sleep. But, you can utilize this at, any time, any given time. And you could have traded this in the morning. And then, once the sellers were gone, you could have just traded, here to the upside, which I did. I started my trading day a little late. And I think I got in like around 9 o'clock, around 4:48, because I saw that we reached the bottom. So we had a little double bottom right here at the bottom. We had some accumulation here. So let me draw it out for you right here. And as you go, guys, draw your, your patterns, highlight, use all these tools that we have here at the bottom. They're pretty useful. You can even write notes, if, if you're new or you just want to go ahead and write something down here instead of reaching for a notebook, you can go ahead and do that. And, just use all these tools that are available because they're really neat and they're very useful. Okay. And so I saw that, we couldn't go below this level here, 447, when I was looking at the chart, and I took a trade here at 448 and, took profit around here, 449. I saw that, we could not break over this level. This was like a key pivot level for me that I was looking at. And I said, okay, if we can't break that level, then we're just going to pull back. But I didn't take the short on the second run. But you could see, the price action, right? We had a lot of buyers here. Why? Because we had a short squeeze. We had a lot of shorts cover. And then we had a little move to the top. And then that was it. And then we have more accumulation here. We have another pattern right here. And look at this candle right here, this topping tail. Couldn't open above this level, which gives you a clear indication to go short and short this under 448.70 and just keep shorting it all the way to the bottom until you see, some upside, there was no upside. It was just like a total, sell off at the end of the day. And we had a lot of buying pressure because the volume supported it. Okay. And another thing I wanted to show you guys was the volume. So what does this tell you? When there's low volume and we have all this price action going on, it's pretty much the algos trading at that time. We probably had some algos trading, the computer trading, the automated trading. And, they were just shorting to the way down. And, lastly, we had, like I said, this little short squeeze to the top. And then we had another sell-off, and the algos were present up until the end of the day. Why they do this, I don't know. I guess just to kind of manipulate the price and kind of bring, the sellers in or the buyers in, because we had a lot of selling pressure at the end of the day. And, it was pretty sweet. I didn't catch it, but I hope somebody did. But anyways, you can see that, we're in a bearish trend because we can't open above any close of the candle like this one, although we have, you know, the tail here at the bottom, the next candle that opened 15 minutes later couldn't open above it. And then we just continue to sell, okay, and sell and just keep going. Okay, so these are little things that, you know, you need to pay attention to. And also it's really important to know how to read your price action, you know, in the event that we don't have volume, because a lot of people like to throw volume, you know, in the mix, which you should. But you know what, if you're an avid trader and you can read the price action, you know, you can make money in any type of environment, because this was just a low volume environment and it was just, you know, algo trading at, you know, at this point. And so whenever you see, you know, this, you have to make your trades pretty quick, and kind of watch your size a little bit. Okay, which is what I did. My size was really conservative, you know, so I didn't have a huge size. Plus I wasn't actively trading for the day. So I just took a little trade, made some lunch money and call it a day. Okay. And then here with Microsoft, what I liked about Microsoft was that, you know, we failed to go over this trend line. And again, you know, if you look at the bigger picture, you know, you see this pattern that's forming right here, right? This falling wedge. You see this, you see how many times, you know, we have the price trying to break through and we just couldn't. And we were just trading, you know, within the pattern. And every time we try to go over it, we just come back and retest and, you know, slide off of it and just, you know, start trading up and down, up and down. But still something to watch. Just because it didn't do exactly what I wanted it to do doesn't mean I'm not going to watch it anymore. Okay, so I saw that pattern, and I saw that, you know, we had a slight pullback in the morning, but it was short-lived. I was watching this around 9 o'clock and I saw this pattern forming right here at the bottom, and I took a trade above 298 because we opened above the previous candle close right here at 8:30. You know, come 9 o'clock, I'm looking at it, I'm like, okay, we're holding above, we don't have a lot of volume, so I have to make this trade pretty quick. And I did, and the price just kept going. It kept going up, it kept opening right above the next, you know, candle that, you know, that had closed. And then lastly, it was exhausted. And then people started to sell, people started to, you know, take profits, and then the bears started to take over because the market was starting to get weak. Okay, and the price action was just following, and it's the same price action that we just saw in SPY. Okay, so it's all the same, guys. All this stuff repeats itself. Okay, history repeats itself all the time. You just have to know how to interpret the chart, how to read it, when to enter, when to sit on your hands. Because if you saw this here and you got impatient, you're like, okay, I see this candle, I see it touch 297.50 and I'm going to take a trade. And then the next candle, it doesn't, you know, it doesn't open above the next candle. And then, you know, it's not doing what you want it to do. And then you panic sell here. And then guess what? The trade goes in your favor in the next 15 minutes, in the next 30 minutes, and it starts going. And then you get FOMO and you're like, oh my gosh, I'm going to buy here. And then you buy, and then this trade just goes against you because you just got FOMO and you were impatient because we didn't, you know, we didn't hold above the whole number. And that's, you know, something else that, you know, you have to be aware of. If we can't hold above a whole number, that's an indication to get out of your trade or to just, you know, a kind of wait, because we deal in whole numbers. Okay, in case you guys haven't noticed, pay attention to the stock, you know, pay attention to your trading. Okay, we close at whole numbers only. We don't, you know, we don't close at odd numbers. Like we're not gonna, you know, be like at 299.10. No, it's not gonna happen. No, that's why, you know, paying attention to the numbers, it's, you know, also very important. To know that is also a skill on how you can recognize that, and it tells you, you know, if the price is going to come down. And that's another method of trading, is trading just price. And That's something that the pros do. That's, another skill that, it's will be discussed at a later time. But, that's something to be aware of. We can't hold above the whole number, wait it out. Okay. If you're looking at it here and you missed it, you're like, oh, well, you know what? Let me just take a short, and you short it all the way down. Okay. All this stuff repeats itself, and never trade when you have all this accumulation here, because you're just going to get faked out. Just wait, be patient, and wait for the price to break out. Wait for confirmation to avoid any losses. Okay. Now let's talk about stop losses. Okay. So I entered at 298. My stop was going to be here at 297, which is just 1 point, really tight, because it could have gone a different way. We could have just retested here and just pulled back into the range and then just consolidate. So, even if it was 1 point, that's fine. I had a really small position, so it wasn't a big deal. And then as I saw that we were trading to the upside, I started to trail my stop. Why? Because we don't have volume. So I can't be rich and keep my original stop here at 297 because we don't have volume. Had we had volume like this, absolutely. Because Microsoft, when we have volume, Microsoft, performs very well. They have a very decent ATR. They have a very decent premium return. And their premiums are really affordable, really cheap, especially on a Friday. And, the contracts that I got were about 6 cents for 300 calls. And I sold them for 50 cents. Okay. That's another thing that you also have to be aware of if you're trading, options contracts. Okay. It's not just about looking at, the candles. You also have to be aware of, what contracts to buy and when to buy them. Okay, so back to the trailing stops. Okay, so it kept going up. I trailed my stop here at 297. It kept going. I trailed it here under, the open of this candle at 298, and I kept going and I kept going. And then ultimately my stop was here at 298.90. And really what I do is I start to trim on the way down and, set a limit order. My order was taken, and that was it. Not going to be upset because I lost on a few cents and revenge trade, because people do that. They're like, oh my gosh, I could have made 60 cents or 70 cents on this contract. Let me see if I could take it again. No. Okay, just follow the price action. Don't get attached to stocks either, or do any revenge trading because something went against you or you didn't take profit at the top. Okay, just treat it as a business. Execute properly, manage your risk, so you can avoid blowing up your account. Okay. Okay, so back to charts 101. That was an example of the short squeeze, and a little bit on price action. Okay, so now another key factor is drawing your support and resistance lines. Okay, this is also something that's really basic for everybody. The basics are to draw your support and resistance lines, to have a better understanding of where the price has been, where it is currently, and where it's going. Other factors are placed to analyze a chart properly, okay? But these lines are very important, okay? Your resistance and your support. There is a rule to them. There's a 3-touch rule, which is that a trend line must touch at minimum 3 times for that trend line to be valid. As the price continues to trend, your resistance line will become new support. If you have an uptrend, vice versa. Okay, so we're going to chart one live, with the class. So, to show you how to do that, because it's really important. A lot of people struggle, and then they have like a bunch of lines everywhere. And no, that's not what it's about. Okay, look for solid levels. Like right here, look how many times this trend line, this price touched the trend line. We have 1, 2, 3, 4. Here at resistance, which becomes support because we broke this level of resistance. And look what it was doing here. It was in what? Accumulation mode. And then, we have the support level here at the bottom. And then it just started on a really nice uptrend. We broke resistance, which becomes support. And then the price comes back and retests, and then it just takes off. Okay. If we can't break resistance levels, then what you would do is look for an opportunity to short. And if we can't break support level, you look for an opportunity and, go long and look for some trades to the upside. That's really what it is. Okay. And then, again, we have another example right here. When you're in a downtrend, this is your support right here. It's trying to break. It couldn't break this resistance here at the high. So it pulls back again, and then it becomes resistance because we can't break above this level. And then we just end up pulling back, creating some new support here at the bottom. And then we come back again to retest the resistance to see if we can break it. We can't. And what's the rule? And look at the price action. It's really choppy. It's getting exhausted. The buyers are just, gone. It's weak. And then we just continue to sell off. Okay. And, these pin bars, whenever we can't break the resistance, it's a strong indication that we have, some sellers are still present and we can continue to sell on the downside. So when you see these patterns here, just wait. If you're trying to buy some calls to the upside, just wait until the sellers are gone, and just wait until it's resting, because shorting can be a little difficult. A lot of people don't know how to do that, and it's easier to buy to the upside, right? So at this point, don't try to buy here, which would be okay, right? But you would have to average your position down, and if we keep selling, you're probably going to get stopped out. So always wait for a clear indication, use your best judgment, and, wait for the patterns to form. Okay. So let's chart something together. So let's see, Microsoft. Okay. I have no lines on here. All right. So when you're looking at a stock for the first time, what I like to do, I like to go into, I like to go to the monthly, see what it's doing. And really what it's been doing, it's been going, it's been on an uptrend for some time. You can see that we're exhausted. We can't break over, the 300s, and we're going to start to pull back. Okay. We're approaching a bearish time. Historically in October, we start to pull back. And we usually have our summer rallies, which was really short-lived. But nevertheless, we're just going to start to pull back. Okay. And then you come down to, to your weekly chart, and then you start, placing these lines here. So let me clear my chart. Okay. So I would start here at the top and start here and set a resistance line here for this higher day at what, 305.80. It doesn't have to be exact, just as long as you can get it here. Oh. Okay. And then, you can start here at the bottom. I usually like to start at the top and then go to the bottom here. Then I'll see, some more price action here. I'm looking at these candles here. We have 1, 2, 3 touches, so that's valid. Then we have this huge rejection here and another line. You don't have to go all the way to the bottom, because are we going to, come all the way down here? Oh, probably not. But this just shows you, how to draw your support and resistance lines. And you don't want to draw too many. This is why I like to go on the big time frames, just to go ahead and look at the bigger picture. And then you just move your way down. Okay, so that's a weekly chart. You go down to the daily, and it's pretty consistent, with the exception of some of these here that are at the bottom, but it's no big deal. Chances are we're not going to hit 245. No, we're not going to do that. So, and then you go to the 4 hour. I like to use 180, and it's pretty consistent. The lines are pretty clean, and you can see all this accumulation here, and we're finally breaking down. And then lastly, if you see patterns, draw them out. Draw your trend lines. We have this trend line right here. How many times is it touching the line? Over 3 times. Obviously, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 times that it touched. Okay, and that's how you do it. Okay, that's how you chart your chart, and then depending on the time frame or what your approach is, you could be looking at this to swing. Okay, like I was talking about this in the group. I said, hey, you know what? If we break over 300 and we can hold that, I would totally love to trade this and maybe even get a swing. That's why I was on big time frame. But again, you can always trade it up and down. If you're range trading and if it's consistent, you could have also caught a really nice short here to the downside, after we rejected to go over 300, because we just traded within the channel and we failed to go lower. Although we're going a little lower after hours, but it could be short-lived, and then we can come back, retest the support here, and then just move all the way back up and attempt to go ahead and break this pattern, because this is a bullish pattern. Okay, the only time it would be a bearish pattern is that if we continue selling here to the downside, then at that point, the trend is over, and we would be looking for another opportunity to go ahead and trade it. Okay. Okay, so that's support and resistance. And we're just gonna brush up just a little bit on the basics of options contracts. So by definition, an options contract, it's an agreement between 2 parties. Okay, again, I'm not too sure how many of you trade options, but it's a transaction of the underlying stock at a certain price. It's referred to as a strike price prior to expiration. Both the buyer and the seller agree to transfer 100 shares of an underlying asset, if the conditions of the contract is met. Okay, and really Wall Street refers to options trading as a poor man's trading, because the options, the trading is really cheap. Depending on what you're trading, obviously we have, stocks like Amazon, their calls are like, $15 each or $20 at times. That's way expensive for the average person. But they call it that because it's priced differently from a regular share. So for example, we have SPY, which is currently trading at $4.45 and 44 cents. A traditional trade, right, where you just buy a share, where you just buy and sell, in a traditional stock trade, you would just be purchasing 1 share, which would cost you, $445 and 44 cents per share. Okay, now in options, we have, when you purchase a contract, you're not really owning the stock, but think of it as a little portfolio that has 100 shares stuffed inside of that little portfolio. So you're technically owning 100 shares at a fraction of the price. Okay, so let's say you wanted to buy 100 shares of SPY. How much would that cost you? That would be $44,544, just to make an implied move of $3 per share. So you'd be making what, $300 or something like that on a huge investment. Is that worth it? No, I don't think so. Well, in my opinion, that's a lot of money to dish out just to make $300 back. No. If I'm dishing out that kind of money, I would be, trading Amazon to, quadruple my return, and in an Amazon trade that size, you can easily make, $100,000 to $200,000 return if you know how to trade that stock. Okay. So, whereas we have, let's say, you're buying to the upside, you're buying a call at 446 with an expiration of 913, assuming you're buying to the upside, and it's priced at $1.77 times 100. That's the formula to figure out how much you're paying per premium. Okay, you're not paying $1.77. You're paying 177 versus buying one share at 445, or like I said, 100, at $45,000, to making pennies on the dollar, which is really what it is. Selling one share would be a gain of like $3 versus 500 on only an investment of $177. And here's the formula. Okay, this is, the calculator that comes into play. And, this would be your expected profit. So your premium, from 177 goes to 302 in a matter of like 15 minutes. Are you going to take profit? Absolutely. Is it way better than, spending like $45,000, on a really small return? No. That's a really big risk. And so that's why it makes, options trading is really lucrative. And what I like about it is that you can trade, big companies. Again, what right? The average person isn't going to be able to buy a share of, let's say Ulta. Ulta, I think it's trading like at like about $300 a share. For you to make, a decent trade. Again, you would buy, 100 shares of that. That's a lot of money. So it makes it more available for you to trade those big stocks like Apple, Microsoft. We have, again, the S&P 500. We have Tesla, and all these other great companies that you can trade because you know them and you know that they're liquid. As opposed to, going into the pennies, into the OTC market, into the unknown. I'm not saying that, it's not a good market to trade, which it is, but you know what, in my opinion, I feel that that's made for people with big accounts and people that are more advanced, because it's a market that isn't that reliable, as opposed to, the stock exchange. It's totally different. The market cap is different. The environment is different. And it's more liquid. And, it would make more sense to, trade options as opposed to shares, as your traditional, trading. And that's what I thought for the longest time. And I said, no, I was like, you know what? It's too complicated for me. I'm not going to do it. It's too expensive. I was like, I don't understand it. And then, I finally, looked into it a little deeper, and I found that, there's just so many strategies that you can come up with, and a lot of ways that you can make money, just trading options. So, it's so fascinating, in knowing all those different approaches. Okay. But this is just your regular approach, trading a naked call or a naked put, because you're not hedging the position. Okay, so that's the basics of options. And we're going to go and touch a little bit on how to manage a trade. So we just touched just a bit on charting the stock. And that's just, the basics of it. There's a lot that goes, into it. If you use indicators, if you use, Fibonacci retracements, levels, Ichimoku clouds, there's just like a lot of stuff that goes into it. Okay, so now that you know how to chart your stock, set your support and resistance levels, now you have to set your entries and stops, but just using the basics. Okay, so how do we manage a trade? So in a day trade, you position yourself based on your account size. If you're scared of a drop, that just means that you have a size you can't mentally handle because you are trading above your means. Okay, again, you're not going to trade Amazon on a 1,000 account on Friday. Yes, don't get me wrong, the contracts are really cheap, but just know that the ATR which is the average true range of a stock, you know, it has its limits. Okay, every stock has its range that trades for the day. Amazon trades $30 in a day, 30 to 50, and you know, sometimes it trades like at 100. And so if you're heavy on, you know, same day expiration contracts on a Friday, it's 10 a.m. and you think that Amazon's going to break out to $4,000, so you're all in, you know, on at the money contracts, and you know, you're risking like about, you know, your whole account basically, because if the trade goes against you, it's going to burn you really bad. Okay, because companies like that move really fast. So knowing what to trade is really important. Knowing how much your account can handle, you know, it's really important. And so knowing the average true range is crucial to your trading. Okay, so if you have a $1,000 account, you know, you might want to stay away from companies like Amazon, and you know, trade something small on the small side, like you know, Boeing. You have Cat, you have, you know, McDonald's, you have the S&P, Tesla, you know, companies like that. But you know, when you trade big names, though, your entries have to be very exact. Otherwise, you know, there's other things that come into play, like IV, your Greeks, and so on and so forth. Again, if you're just trading options. Okay. And again, just trade what you know. And in other words, do your homework a day before or a few hours before the market. So don't wake up and, you know, 5 minutes before the market starts, you're going to start trading. You're going to look at, you know, Twitter and see what, you know, so-and-so is saying and so-and-so is trading. Yeah, you know, some of these people post stuff online, but you know what? They have a plan. They have a plan. They know what's going on, and they're familiar with the market. So whenever I see someone post that's, you know, recognizable, like let's say somebody like Umar, or you know, the Jesus of Wall Street, I kind of know what they're looking at, and I know why, you know, why they're mentioning, you know, the stock. They're not going to break it down for you and tell you, oh well, I'm looking at it because we're in accumulation and we're going to break out at, you know, such and such level with volume, this and that. No, they'll just mention it, and it's up to you to know what's going on. Okay, so again, back to the ATR. Knowing the average true range can help you identify the moves of a certain stock, when to get in, when to get out, how to approach it. If your ticker has reached above its ATR, that it's done. And anything beyond that, only scalps are valid, or you look for a short opportunity, because what goes up must come down. Okay, and if we don't reach our ATR for the day, like Microsoft, you know, Microsoft has a really high ATR, then that just means that, you know what, I have, there's low volume, I need to make my trade really quick and I need to get out. Okay, so that's something to keep in mind. And a lot of people don't know that, but it's something, you know, something to keep in mind. Okay, so here are some trading mistakes and how to avoid them. We have something common as like trading paralysis, where you stare at a chart and, you know, you watch the moves happen without participation. You lack confidence. Your risk management is just really poor. You're impatient. You hold on to losers and you cut winnings too soon. You don't do any research, a watch list, or prepare for the week or the trading day. You know, all of the above, if not more, causes FOMO, panic, and over trading. Knowing how to interpret a chart and being in the know in the market will increase your confidence in trading, because it's going to just make it easier to execute and take profits. Okay, because you're going to know, hey, you know what, this does work. I think I found my edge. And hey, you know what, if it doesn't work, big deal. You know, just make a note of it. Keep a journal, which is something that, you know, I tell everyone, keep a journal. Know what you're trading, you know, outline what you did for the day, you know, write a summary, write down your trades, your timing. And again, I'll give you guys an example. My problem was that I was just impatient. And I noticed that when I was when I was looking back at my logs, and at the time I had a mentor, and I was like, hey, you know what? Oh, there's something wrong with my trading. I was like, I can see these moves and I see, what's going on, but I was like, I don't know what I'm doing wrong. And so my mentor said, he was like, okay, well, have you been taking notes? He's like, have you been logging your trades? I said, yeah. He said, okay, well, you know what? I want you to go back for the past 3 months, go back to your notes, read them, and figure out what's wrong. He was like, there has to be something in your notes. There has to be something in your pattern, in your behavior that, isn't really clicking. And that's really, stopping you from moving forward. And really what it was patience. I was getting out of my trades, like, within minutes. I wasn't waiting for the candles to close or for any confirmation. I was just trading in my opinion, blindly, because I had no plan, you know. And everyone in trading though has had this happen at one point in a time. Okay, it happens. But what I'm trying to say is that, having patience and having an education, having, knowing, when to get in, when to get out of a trade, having a trading plan helps you become more confident really overall in your trading. And then once confidence starts to kick in, then, hey, you know what, you got to look out for your risk management. And then, at that point, you have to look out for your patience. Okay, be a little patient, because if you're not patient, you're going to pay for it and you're going to regret it, because sometimes, you cut your winning, your winning streak, and you're like, oh, okay, I'm going to get out because I'm at 20%, which is good. But then guess what? The stock just keeps going. And so don't look at your P&L. Don't do that. It's not about the money. It's about how the chart is moving, and getting out at your target price, or getting out at a sign of weakness. That's really what it's about. It's just executing. That's it. Just be mechanical about it. You don't really think too much about it or overthink, because that's when, you start to make bad decisions. So this is what I tell everybody: just write a plan, know what you're doing for the day, do some research, read, and write down your plan and just follow through with it. Okay. And become disciplined. And, again, invest in your education. If you guys don't know the basics of price action, you really should know that, because it's really important to your trading. Everything else comes second, your indicators and, scripts, and so on and so forth. All that stuff comes in second. What you need to work on is reading your price action, and really kind of reading yourself. What kind of person are you? Are you patient? Are you impatient? Are you someone who just doesn't have time to trade in the market, which is cool. If you don't, then, we'll look for some long positions, look for, some swings. Don't try and trade, on when you're working, because you're not going to be paying attention to the market. I mean, sometimes, you can do that. I do that, but, I've been doing this for a long time. I'll just trade on my phone. I don't need to be on my computer. I'll just execute my trades on my phone, or I'll be, out and about at the store, and I'll be placing some trades. So, just do, what works for you, and always have a plan. Okay, so that's the end of our, our outline and the strategies that I was going to go over. So, who is this for, and what do we offer? So our courses are designed to apply the skills learned in any market you choose. Again, whether you're a stock trader, you trade in the OTC market, currency, options, crypto, you name it. As long as you have a chart, you have to be able to interpret it. Okay. Our courses in our group are for, people who want to put in the work. You learn and overall become independent, so you don't rely on anyone else to tell you when to buy or sell. And even if you're in a stock group, okay, you're in a Discord, with someone that alerts, trades to you. Okay, I know this because I've been there before. But you have to know the basics. Okay, you have to know how to read a chart and how to interpret that, because yes, those groups are pretty neat. You know, they'll give you their entries and exits, but again, why? Because these guys are experienced, and you know, they have a plan and they know what's going on. And again, if you're able to read a chart, you can go ahead and take those alerts with confidence, but you don't want to do that all the time, because you want to have, you know, your own plan. I like to know what's going on, you know. That's why, you know, I have my own plan. And I learned that the hard way, you know, years ago. I was like, well, you know, I'm following someone else's trades, but, you know, it's not working for me. Why? Because these people have really big accounts. You know, they can average down at any time, and they're really not going to show you, you know, exactly where they are at that trade. Again, because they have their own plan. And sometimes these guys are, you know, have a huge account and they can average down or just break even because they average down and they never lose. And of course, that's, you know, the best ever, right? To have like an infinite count. But anyways, if you know how to read a chart, you can survive on your own or in a group. Okay. Our community is small and it's private, but overall it demonstrates good teamwork. So what do you expect, or what can you expect from the group or the courses? You know, you can expect to elevate your trading, to utilize in any market, you manage your risk, and, you know, basically overall it's to read the market. So it's not just about your chart. It's also about what's going on in the market. You know, where are we at? You know, are we looking at tech? Are we looking at, you know, energy or clean energy, and so on and so forth. Okay, so here are our current offers. We have a discount through Rachel. Her code is Rachel 92021. And everyone here gets 25% off. And you know, something's, you know, some stuff to think about, no pressure. If you guys are interested, just send me a DM and we could see what we could do. Okay, so now that we are done, does anybody have any questions? Again, thank you guys for joining. If you guys have any questions, please feel free to reach out. And I hope everybody has a great day and a great weekend. Thanks so much, everybody, for joining. And thank you, Rachel, for you know, letting me speak to this group. You guys are awesome. You know, keep grinding, and, you know, keep going, because this industry is really hard, and we are very, I would say, you know, overlooked just a little bit. But anyways, keep going. And if you guys have any questions, let us know.
Thank you so much, Angie.
Thank you, Angie. That was wonderful.
Thank you, Angie.